You have a Muni Impact Fund that really seeks to address some of the income inequality issues like education and healthcare investing. How are you incorporating all of that into your Muni Impact portfolio?
Well, first, it's a pleasure to be here, so thank you for having me. We invest in underserved and low socioeconomic status communities. That's our mission, that's our philosophy. And as an impact investor, each one of our investments has a specific intention. So when we're investing in education, we want to reduce the achievement gaps that exist between those districts that have not. When we're investing in healthcare institutions, we're investing in safety net facilities that not only are doing a great job in providing healthcare within the confines of the four walls, but are actually going into the community to make that community healthier, to increase effectively the life expectancy of the people in that community. And in many cases, for underserved communities, the gap, the life expectancy or the death gap that exists between high income zip codes and low income zip codes can be upwards of 20, 25, 30 years.
So much of impact or ESG investing has been sort of a double negative, what not to do. Don't do tobacco, don't do gun stocks. How are you turning that into a positive, into what are you doing?
So, yeah, historically, all the huge numbers that you hear going into the industry largely are basically negative screens.
Right.
And I think one of the things that differentiates our product and our sort of sustainable platform as a whole at AllianceBernstein is the fact that we're trying to be offensive and active with our impact. We are seeking out the impact that we're trying to make. So we are sort of going to communities and saying, you know, what are the needs that you have and how can we help you in building those and partnering with you in terms of creating equity in the infrastructure and beyond.
How are you also addressing the active versus passive debate? Because so far, really everyone in bonds has gone passive as the Fed comes in, all yields falling, bond prices higher, really affects everyone. Now that rates are rising, how are you sort of using your impact portfolio to make the case that active management should be addressed?
So in order to do sustainable investing, whether that's impact or thematic or what have you, to do it well, I really think you have to be active. I think you really have to to be engaged, get your hands dirty, really sort of partner and engage with the entities that you're investing in, whether it be municipal or corporate. And for us, as an active manager, that helps justify our fees, right? And hopefully the performance will play out over time. We truly believe that using environmental, social, and governance frames allow us to identify value and mitigate risk. And I think if we do that consistently over time, there's no reason why we shouldn't outperform.